Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.com. Subscribe. Let's dive right in. In today's episode, we'll cover big names like Infosys announcing earnings, the challenging market outlook affected by the inflation report, high office vacancy rates impacting real estate and pushing rent lower, the availability of the Bitcoin ETF and the involvement of traditional asset managers, the high cost of raising children, including major expenses like food, housing, and childcare, and Peter Lynch's recommendation to invest in businesses that can be run by anyone. Additionally, we'll discuss U.S. office vacancy rates reaching a record-breaking 19.6% and its impact on the real estate market, Meta stock's positive performance and nearing all-time high, iRobot shares plunging, and the FBI investigation surrounding the SEC hack.
Brace yourself, because office vacancy rates in the United States are at an all-time high. Currently, there's more empty office space than we've seen since 1979. And get this, the rate has skyrocketed to a record-breaking 19.6%. That's a hefty increase compared to the first quarter of 2021 and surpasses levels we've seen in the past 40 years. Now, you might be wondering why this is happening. Well, it's because companies are laying off employees left and right. Even big players like Meta, Twitch, and Microsoft are downsizing, which means they don't need as much office space. On top of that, many workers are now seeking flexible jobs or remote work, leaving offices vacant and pushing companies to downsize even further. So how does this impact the economy? Well, it's not great for several industries, including real estate. New construction numbers are at their lowest since 2012. With all this empty space, the supply of office spaces is high and the demand is low, which can drive rent prices down. But hey, it's not all doom and gloom. There's still a silver lining. Modern buildings in prime locations with awesome amenities are still in demand. And interestingly, suburban offices seem to be faring better than traditional office spaces, probably because they're closer to communities. Moving on to global news, there are a few interesting stories making waves. China claims to have cracked the encryption of Apple AirDrop, which allows them to identify senders. Starbucks is also facing a lawsuit over allegations of deceptive marketing regarding their 100% ethically sourced coffee. In Germany, rail strikes and farmers' protests are causing disruptions in Europe's largest economy. And speaking of disruptions, global shipping rates are set to rise as carriers avoid the Red Sea due to Houthi attacks. Oh, and here's a tidbit for you. Mortgage applications have soared in the first week of the year as interest rates trend lower. And the government says that TVs, cars, and gasoline are about to become more affordable. So keep an eye out for that. So here's some exciting news for all you stock market enthusiasts out there. Meta, the social media giant, is on the verge of reaching a new all-time high. Thanks to positive commentary from Mizuho Securities analysts, Meta experienced a whopping 65% jump, closing at $370.47. Mizuho has set a new target of $470 for Meta, raised from the previous target of $400. They believe Meta's increased revenue, driven by the use of AI to automate customer service on WhatsApp, is the primary reason for this upward trend. What's even more impressive is that Meta is now inching closer to its previous all-time high of $382.18, which it achieved back in September 2021. Meta has come a long way from being one of the slower-growing companies in the Magnificent Seven group. In fact, it has been performing exceptionally well in recent months, with its stock price surging by a staggering 78% since January 2023. That's even higher than the likes of Tesla, Boeing, and Microsoft. Although Meta is still trailing behind Nvidia, which has seen a remarkable 237% increase. In other news, we have a reminder for you. iRobot shares witness a significant drop of 19% due to reports suggesting that Amazon won't be making any concessions to resolve the ongoing EU probe. So keep an eye on that development if you have any interest in iRobot stocks. The Securities and Exchange Commission, SEC, has given the green light for certain investment companies to offer exchange-traded funds, ETFs, that track the price of Bitcoin, aka spot Bitcoin. So what does this mean for you? Well, it's about to become a whole lot easier and more affordable to invest in BTC. With these new ETFs, you can get in on the action without having to buy and store the actual Bitcoin itself. Pretty cool, right? But hold on a sec, the SEC wants to make it clear that they're not necessarily on the Bitcoin bandwagon. They're not approving or endorsing Bitcoin. They're just giving the okay for these ETFs to exist. Now, this approval could have some big implications. For starters, it's likely that the Grayscale Bitcoin Trust, which currently holds a whopping $29 billion worth of Bitcoin, might convert into one of these ETFs. That's a whole lot of investors getting involved. And it's not just the small players. Industry giants like BlackRock and Fidelity are also getting in on the action, planning to launch their own Bitcoin funds. Oh, and speaking of Bitcoin, did you hear about the recent FBI investigation into a hack at the SEC? Yeah, there was some buzz about it, but turns out it was a false alarm. The FBI is currently looking into what went down, though. Planning to start a family, but not sure if you can afford it? It's important to be aware of the cost of raising a child so that you can be prepared. Now, answering the question of how much it costs to raise a child can be a little complicated because it depends on a lot of factors. Things like the age of your child, the number of children you have, your lifestyle, and even the city or country you live in all play a role. For the purposes of this guide, let's focus on the United States. The cost may differ in your country, but this will give you a basic idea. On average, a middle-income family with 2 children will spend around $310,605 to raise a child born in 2015 up to the age of 17. Now let's break down some of the largest contributors to this cost. Food is a major expense, even if you make your own. A typical family of 4 spends about $11,500 per year on food at home. And if you're just looking at the cost of feeding a child, it comes out to about $900 per year. Another big expense is housing. You may need to move to a bigger house when you have a child. According to data from the USDA, lower-income families spend about 7% of their income on housing for a child, while middle-income families spend 5%, and higher-income families spend 9%. Childcare is yet another significant cost. Depending on your location, childcare can cost anywhere from $5,436 to $24,243 annually. This cost includes education as well. To save on costs, you can consider preparing food at home instead of eating out, moving to an affordable city or even a different country, and exploring government facilities or asking for discounts when it comes to childcare. Remember, the cost of raising a child can vary, so it's important to carefully consider your own circumstances and make a plan that suits your budget. I came across this quote the other day and it really got me thinking. It's from this guy named Peter Lynch, who's pretty well known in the finance world, and he said, and I quote, "Go for a business that any idiot can run, because sooner or later, any idiot probably is going to run it." Now, on the surface, this quote might seem a bit harsh, right? But when you dig a little deeper, there's actually some truth to it. What Lynch is trying to say here is that when you're looking to invest in a business or start your own, it's important to choose something that's not overly complicated or reliant on one person's genius. Because let's face it, sooner or later, that person might not be around, and you don't want the whole thing to come crashing down. Think about it this way. If a business is so complex that only a genius can run it, then what happens when that genius leaves? You're left with a big old mess, that's what. So it's better to focus on finding something that's simple, straightforward, and has a proven track record of success. That way, even if an idiot takes over, they still have a good chance of keeping the ship afloat. So, the next time you're considering a business venture, remember what Peter Lynch said. Go for something that any idiot can run, because you never know who might end up running it in the future.
In today's podcast, we covered big earnings announcements from companies like Infosys, the impact of high office vacancy rates on real estate, Meta's impressive stock performance, the approval of a Bitcoin ETF and investigations into a SEC hack, the cost of raising children, and Peter Lynch's advice on investing in businesses. Thanks for tuning into the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.